Something happened in the XRP data last week that almost nobody connected to tomorrow's deadline. The biggest holders in this market stopped selling, not slowed, stopped. 98% reduction in 10 days, so let's break it all down. For 4 straight months, the biggest XRP wallets have been doing one thing: moving coins onto exchanges. 3.8 billion coins have flowed from private wallets onto Binance since January. At current prices, more than $5 billion of supply. Sitting there, ready to sell. Every rally this year hit the same wall. The March 17th rally after the agency that regulates Wall Street, the SEC, joined the commodity regulator and classified XRP as a commodity, killed within a week. The April 7th pump on the first Iran ceasefire news killed within 24 hours. Same pattern every time. Whale supply on exchange, waiting, rally starts, supply releases, rally dies. Picture a fire hose. For 4 months, somebody has been aiming that hose at the XRP price. Every time demand pushed the token up, another blast of supply came through. Consistent, mechanical, devastating. Then around the 10th of April, the flow slowed. By the 14th, it stopped. By the 18th, daily whale-to-exchange readings were nearly flat. That is the 98% collapse I opened with. And it happened exactly as 3 events converged into the next 8 days. Tomorrow evening, Washington time, the 2-week Iran ceasefire expires. 1 week from today, the Federal Reserve opens its next meeting. Jerome Powell's final one as chair, and at some point before May, the Senate Banking Committee decides whether to mark up the Clarity Act, the crypto market structure bill that passed the House 294 to 134 last July. Senator Cynthia Lummis has publicly warned that missing the May window kills the bill until after 2030. The whales went silent right before all 3 of those landed. Almost nobody outside this channel is running that sequence. Now, if I stopped here, you'd think whales going silent means whales are buying. That is not what the data says, and the distinction matters more, not less. Here is why. Whales stopping sales does not mean whales are accumulating. It means the supply pressure that killed every rally for 4 months is no longer being refreshed. The coins they already parked on Binance, roughly 2.76 billion of them, are still sitting there, still dangerous, but no new supply is arriving behind them. The hose is off. The water already in the room is still there. That distinction is what lets us read the other 3 data streams running underneath the price. First, exchange-traded funds. These are products that let regular investors buy XRP through a normal brokerage account, the way they buy a stock. XRP exchange-traded funds pulled in $55 million of net inflows for the week ending April 18th. Strongest week of 2026. 7 positive days out of 7. 1 day alone, April 15th brought in over $17 million. Cumulative inflows since these products launched in November of last year have climbed back to $1.27 billion. Exactly where they stood in mid-January before the single intraday shock of $53 million in outflows on January 20th wiped months of gains. The funds have fully healed from that scar, and the pattern matters. In January, the money came in one burst, then dried up. In April, it has been arriving in a steady, disciplined drip, day after day. That is how institutions buy when they are positioning ahead of a known catalyst. Second, whale accumulation. The 30-day whale flow, moving average from CryptoQuant, the tool analysts use to track the biggest holders, just hit a 10-month high. Large wallets are currently absorbing roughly 11 million XRP per day. Most aggressive net accumulation since last June, right before the summer rally that took the price from $1.90 to $3.65. Third, exchange reserves. Total XRP held across all cryptocurrency exchanges globally has fallen to 1.7 billion coins. 7-year low. Coins are leaving the places where they can be easily sold, moving into long-term storage. Cold wallets, institutional custody. Standard Chartered's research team published a note on April 9th laying out what they called the coiled spring scenario. When exchange supply falls below roughly 1.8 billion coins and institutional demand holds, the only variable left is time. Think about what this means if you have held XRP through this year. Every time the fundamentals looked strong, the price took another hit. Every rally ended the same way. You watched it happen for 4 months. Last week, for the first time in 2026, the force doing that damage went quiet. That is not the same as a breakout. It is not a prediction. But the thing that has been beating this price down every time it tried to move is currently not beating it down. The lane is finally clean. Here's the part where this channel usually loses the hopium crowd. But you are still here, so you already know that favorable is not the same as safe. Let me show you what is fighting every bullish number I just walked you through. The counter-argument is not speculation. It is in the data. 3 concrete risks. First, 6 out of 10 XRP holders are underwater. Roughly 36.8 billion coins are currently held above their cost basis. Every time the price rallies toward $1.50, $1.60, $1.70, a chunk of that underwater supply has a chance to break even and exit. That is not theory. That is what killed every prior rally this year. Second, the 2.76 billion coins already on Binance. Whales stopped adding, but they did not pull those back. That supply is sell ready. A single decision from one of those wallet clusters can push spot price down 6 to 9% in a session. Third, concentration. The top 50 XRP wallets control 40 to 45% of circulating supply. The top 100 control 75 to 80% once you include exchange custody and escrow. Every price move in this asset is being decided by a very small number of very large actors. Retail is along for the ride, and retail is still bearish. Then there is the weather system sitting over all of this. On Friday, XRP hit $1.51, first touch of $1.50 since the February sell-off. Then Iran's Revolutionary Guard closed the Strait of Hormuz again, fired on multiple commercial ships over the weekend. A French ship, a British freighter. Oil jumped 6.5% overnight. Brent crude back above $95. U.S. crude closed Monday just under $90. Bitcoin dropped to $75,000. XRP lost 6% from Friday's high. Every bullish fundamental we just walked through hit that wall, and the ceasefire that was supposed to hold this together expires tomorrow evening Washington time. President Trump told Bloomberg on Monday that an extension is, in his words, highly unlikely. He said the United States blockade of Hormuz stays in place until a deal is signed. Vice President Vance, Special Envoy Witkoff, and Jared Kushner are in Islamabad right now, second round of talks. The White House said Iran has agreed to everything. Iran said significant differences remain. Both cannot be true. 6 days after whatever happens tomorrow, April 28th and 29th, Jerome Powell opens his final meeting as Fed chair. Kevin Warsh, the man President Trump nominated to replace him, takes over if the Senate confirms before June. Rates are expected to hold at 3.5 to 3.75%. Inflation projected at 2.7%, above target. What traders are watching is not the rate. They know he holds. They are watching the language, specifically how Powell describes the inflation impact of the oil shock. Contained means the Fed thinks it stays in energy and food. Broadening means it is spreading into the rest of the economy. Contained is dovish. Broadening is hawkish. One word from one man bends the sky over the entire crypto market. Fundamentals set the destination. Macro sets the timing. Most channels stop here. They give you the bull case, the bear case, and call it analysis. We are not done, because there is one number nobody else in this niche is running, and it reframes everything. Let me do the actual math on how fast the Binance overhang clears at current absorption pace. Whales are currently absorbing 11 million XRP per day. Over a 30-day month, that is 330 million coins. Exchange-traded funds at $55 million per week of net inflow translate at $1.42 per coin to roughly 155 million coins of new demand per month. Total demand-side removal from circulating supply, 485 million coins per month. On the other side of the ledger, Ripple, the company, releases roughly 200 million XRP per month net from escrow. That is new supply entering circulation. Net removal from available supply, 285 million XRP per month, every month, at current pace. Now take the 2.76 billion coins sitting ready to sell on Binance. Divide it by 285 million per month of demand absorption. 9.7 months. At current pace, before the Clarity Act passes, before rates get cut, before a single additional institutional mandate unlocks, the overhang that has capped every rally this year absorbs itself in under 10 months, and that math assumes the whale silence holds. If whales start actually accumulating, buying rather than just not selling, the number compresses. If exchange-traded fund inflows accelerate on a Clarity passage, the number compresses further. That is why the whale silence last week matters more than the Friday rally itself. The rally was a symptom. The silence is the structural shift. Here is your playbook for the next 8 days. Signal 1, tomorrow's ceasefire, Wednesday evening, Washington time, roughly 36 hours from when this video goes live. Watch the Strait of Hormuz shipping data. If more than 20 commercial ships transit on Wednesday or Thursday, an informal extension is happening regardless of what any government announces. If ships stay parked in the Persian Gulf, the fighting resumes. Signal 2. The Federal Reserve, April 28th and 29th. Listen to Powell's press conference at 2:30 Eastern on the 29th. The word I am listening for is contained or broadening. Any committee member flipping to zero cuts for 2026 would be a hawkish shock. Signal 3. The Clarity Act. Senate Banking Committee Chairman Tim Scott has not announced a markup date as of this morning. Senator Lummis has warned that missing May kills it until after 2030. If Scott announces a late April date this week, institutional money pours in ahead of it. If the announcement slips into May, XRP loses its last major 2026 catalyst. Signal 4, price. A daily close above $1.55 on volume confirms the shift. A daily close below $1.37 breaks the 50-day moving average and reopens the January lows. Above the price, there are walls. Behind each wall is a crowd waiting to sell. $1.48 to $1.55. $1.60 to $1.75, $1.80 to $2, the top of this year's opening range. XRP opened 2026 at $1.84. It has not been back since. Under the bull path, ceasefire holds, Fed dovish, Clarity advances, Standard Chartered's 2026 target is $2.80. Their number, not mine. Under the bear path, ceasefire fails, oil above 100, Clarity stalls, level 37 breaks, and the test of $1.28 opens. Here is what we know. The supply engine that killed every rally this year went silent last week. The demand structure underneath the price is the strongest it has been all year. The only missing piece is the macro decision, and the macro decision arrives in the next 8 days. Tomorrow, we find out whether the Islamabad talks produced a deal or the war resumes. By Thursday morning, the on-chain reaction will tell us whether last week's whale silence was strategic positioning for a breakout or a pause before the next blast of supply. I will have the numbers. I will have the breakdown. Don't miss it. This content is for informational and educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Fundamentals set the destination. Macro sets the timing. Stay sharp. Stay informed.